a stock that has awarded its investors with about a 9x return since 2020, which means if the investors had put in rupees 10,000 in the stock, say in May 20, they would have made about 95,000 now. Let's understand ABC of ABB. Wait, did I confuse you? I'm talking about ABB India here, a stock that has awarded its investors with about a 9x return since 2020, which means if the investors had put in rupees 10,000 in the stock, say in May 20, they would have made about 95,000 now. Pretty impressive, right? Not exactly. We are just looking at a sparkly and a wonderful era of the stock in the last 3 years. But if I go beyond that period, let's say in 2019, I'm sure as a long-term investor, I would have been frustrated by the performance of this stock. In 2016, the stock was trading at a value of around rupees 1,000 and jump forward to year 2019 and remained at similar levels in the range of rupees 1,000 to 1,200. So not much of an action happening here. So what exactly changed then that made ABB stand out? Let's find out. ABB India is a subsidiary of Switzerland-based ABB Group and a technology leader in electrification and automation products and solutions. It currently derives revenues from 4 of its verticals, that is electrification, that is its largest segment, followed by motion, industrial automation, and robotics and discrete automation. Now, let's discuss factors leading to this transformation and the subsequent outperformance that we are looking. First is the new strategy from 2018 onwards. In 2018, the company decided to divest its power grid business to Hitachi in 2020. Along with this was solar inverter business and some other businesses as well, which didn't fit in company's core business for the future anymore, which led to the company divesting about 40 to 45% of its revenues. This way, they shifted its focus on providing digital solutions wherein they saw higher growth in areas like robotics, automation, and electric mobility. Moving forward to 2023, the business reported a revenue growth of about 21.7% between calendar years 2020 to 2023, supported by its healthy order book growth, which has now more than doubled in the same period itself. Other factors in play also include company focusing on expansion in Tier 2 and Tier 3 cities with more orders coming from here and increased focus on localization. Also, what we are looking at is improvement in the margin profile. Higher share of services and exports and along with localization and better control over the supply chain cost has led to margin improvement this quarter. Major highlight was also the raw materials as a percentage of revenue going below the 60% level this time. But even if we go back and look at the historical trends, significant improvement here with margins inching up from 4.8% in 2020 to 14.3% in 2023, which is a substantial change. But let's discuss the growth strategy going forward. Future growth is expected to be driven by continued investments in high-speed rail, metros, and market expansion, along with some continued expansion in their Tier 2 and Tier 3 cities. Focus areas are expected to see a growth of about 15%. Now, let's understand the premium valuation of over 100x that the company commands. One major reason playing here is the scarcity premium. Let's dissect the shareholding pattern to understand this phenomenon. About 75% stake is held by promoters, while foreign and domestic institutional investors hold about 12% and 5% respectively. These parties in general are in for a longer time frame, which leaves merely about 7% in for the common public. Thus, the market float here is much lower, leading to low supply of company stock in the market. Therefore, when we pencil in the kind of growth the company posts, the investors are ready to invest at higher prices as well, which supports these higher premium valuations that we are looking at. So that explains the scarcity premium concept well. Another angle to this is explained by brokerage firm UBS, wherein they analyze that ABB's valuation has been driven by its EBITDA margin. When the margin improves, the stock tends to re-rate. Thus, they expect ABB's EBITDA margin to continue improving, likely supporting the premium valuation going forward. Now, with recent brokerage calls, we see a potential upside of around 6% to 11% in ABB India. UBS maintains buy on ABB with a price target of about 8,830. Nuvama upgrades ABB India to buy with a price target of about 9,250, wherein Jefferies retains a buy on ABB with target price of about 8,845. So what do you think about ABB India? Let us know down in the comments below and stay tuned to NDTV Profit.